time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Okay, so the company that I'm going to talk about here is Consolidated Water Co. It's a U.S. listed company on the NASDAQ under the symbol CWCO. And this is actually a company that I first became familiar with many years ago. I've been following it for a time. We spoke with management. Actually, we had a meeting with them when we were at the Roth conference last year in Los Angeles. So it's been an interesting business, but it's definitely had some challenges in the past. Although recently they just reported their Q4 and full year results, reporting it just last week. And they reported record revenues and some very interesting statements and fundamentals. So I felt now is a good time to up the research on it, take another look, and maybe talk about it a little bit on the podcast. So they trade right now at $16.75. It's a small cap company in the US, 260 million market cap. And as we said, this is essentially a water company. They operate wastewater plants, distribution systems. They also specialize in seawater desalination, water treatment facilities. They have a number of businesses. You could actually divide the overall company into four segments. They have their retail water segment. They're the exclusive provider under government license of water as a water utility in Cayman Islands. They have their bulk water segment in the Cayman Islands and the Bahamas, where they produce and supply water to government-owned distributors. They have their manufacturing segment, where they provide a variety of design, engineering, and management services to commercial clients, municipal and industrial clients. And then they also have their services segment, which is essentially plant construction management and operations. So they just, as I'd said, put out their 2022 annual financials. Very strong growth in revenue, record revenue of $94 million, up 41%. And strong earnings per share growth as well, 135% growth in earnings per share, up to 54 cents. So we're looking forward into 2023, good numbers in 2022. What are they going to do next or this current year? Well, the company in 2022 secured more than $150 million in major multi-year project contracts, which they expect to contribute significantly to earnings in this current year. So this includes an $82 million contract to design an advanced water reuse facility in Goodyear, Arizona, a 10-year, $49 million contract with the Water Replenishment District of Southern California to operate and maintain advanced water treatment facilities, and a $20 million contract to design, build, and operate a new desalination plant in the Cayman Islands. When we look at the company, obviously water is it's a very topical issue, particularly in the investment industry. People want to know how do I invest in the lack of supply in water as the need for water, the demand for water expands. So there are very few options, this being one of them. There are a couple other companies that we looked at as well. But I've taken a few excerpts from the company's corporate presentation about what they think their long-term opportunity is. So they quote that the market for water recycling and reuse technologies is growing at a compound rate of almost 14%, expected to hit $40.5 billion by 2026. Some of the drivers certainly in North America include recovery of the manufacturing sector, expanding of the global population, and then also growing demand in the agricultural sector. So they are estimating, or it is estimated, there will be a 40% gap between global water supply and demand by 2030. And the United States, where most of their operations are, leads the world in investments in water reuse and recycling technology. And then just in the US desalination market opportunity. So desalination, for those that aren't familiar with it, this is converting seawater into drinkable fresh water. This market is growing at a rate of 8.6% compound annual growth. It is expected to hit $3.2 billion by 2027. So we hear stories a lot in places like Texas, California, and Florida that there is freshwater scarcity. So certainly there are opportunities to invest in some of the solutions to that problem. And I've said many times in the past, investing in solutions, intelligent solutions to important societal problems is one way to find good opportunities in the stock market. Now, looking at the financial position, the earnings quality, both based on 2022 numbers, are very strong. So this is actually a net cash company. They have almost $51 million in cash and equivalents on the balance sheet, negligible long-term debt. That gives them about $3 in net cash per share. Also strong earnings quality for 2022. $8.4 million in reported earnings from continuing operations, but over $21 million in reported net operating cash flow, and then $13.7 million in free cash flow. So good, strong earnings quality in 2022. And this is something I really wanted to take a look at because when it comes to their Caribbean clients, Cayman Islands, Bahamas, there can be delays in terms of getting payment for their services. That has been an issue in the past. They have always been paid, but it doesn't always happen in a timely manner. So that's something that we wanted to make note of. But certainly in 2022, obviously, they're generating very strong cash flow relative to their reported earnings per share. Now, looking at the company historically, this is where I'd mentioned before, it's not always rosy for the business. There's been good, fairly consistent growth in revenue over the years. I know that there was a COVID impact in 2021 and revenue did drop to about 67 million from 72.6 in 2020. But there's also been fluctuations in the company's profitability and their gross profit, also in their net income. So 2022 was certainly a record year when it comes to revenue. It was far from a record year when it comes to profitability, which could be an opportunity going forward if there's a high likelihood that the company is going to transition back in historical net profit margins. Valuations. So, the valuation relative to earnings is certainly a premium to the market, trading at a price to earnings multiple of 31 times the 2022 reported earnings from continuing operations. The cash flow looks better, trading about 12 times cash flow, about 19 times free cash flow. So what is our take? Well, we think this is a very interesting business. We like the idea of investing in water for the reasons I talked about. There are a lot of problems to solve in that space. It's essential. The current fundamentals do appear to be very strong, and there are several attractive growth drivers for the company and a positive outlook in 2023 and beyond. But on the other side, profitability historically has fluctuated, so it's not been that clean year-over-year growth story every year. There is some history of late payments from customers. Certainly not an issue in 2022, or it doesn't seem anyways. But also history of delayed and canceled projects. So I know that there was a huge project that they were talking about several years ago in Mexico to build, I believe, a desalination plant. That was going to be a big growth driver. It didn't end up happening for a number of political reasons. So that's something to keep an eye on. Valuation based on trading earnings is not particularly low. Now, what is it going to look like going forward? Well, that's what we need to figure out. So what are the next steps for a company like this? Well, we're looking at prioritizing Consolidated Water in our research list, doing more of a deep dive into the future growth prospects. This would include an interview with management and really get a stronger assessment of what the opportunities and the risks and the growth prospects are over the next 2 to 3 years. Now, there's only one analyst I can see that covers this company. That particular analyst is expecting huge growth in 2023, which would actually drop the valuation down to a much more attractive level. Of course, we can't give that any credibility without doing our own research. But we plan to look deeper on this company over the next couple of weeks here and see what we can come up with.
Yeah, it's an interesting business, and I do recall interviewing management at the Roth conference. So we'll reach out to them again and push further. Certainly, we'd like to see stronger growth this year. I also look into the recurring nature of the business. They have some projects. I know another water-related company we follow, HEO is the symbol on the TSX. They have different areas. Some are recurring. Some of the business is project-driven. So, a large percentage of their business is recurring, but they do get these one-time kind of contracts, and you got to factor that into whether or not that can continue going forward.
And
Yeah,
that would be the same with Consolidated Water. I mean, if you look at their Caribbean business, I think that most of that is fairly recurring utility style. But then they are building plants. Some of these plants, they end up operating, or at least that has been the idea in the past. So that may produce a more recurring revenue. But some of these are essentially just manufacturing as a service, and maintenance as a service. So yeah,
yeah,
these
it
are all
does look
questions we
like
need
at
to
least
answer.
there's at least one analyst that's looking for strong growth next year. So, I mean, that would be interesting. We'll look
Mhm.
further into that company.